I'm audible to everyone. क्या मैं सबको सुनाई दे रहा हूँ? अगर सुनाई दे रहा हो तो प्लीज मेरे को रिप्लाई करिए. सबको मेरी आवाज आ रही है? Okay, now I'm starting the class. Let's start, guys. Guys, today my video will be on English. So I will try my best to speak in English. So let's start. First of all, I will try to some doubts are there regarding options. I will clear that. You may be thinking that what will be the strategies that Sham Sundar sir will be. But first of all, I will tell you something about options. The mentality of the humans and traders. Okay, now is everyone there? You okay? I think this now. Let's start. Okay, first of all, traders buy option with the hope they would double their investment. With such mindset is a perfect recipe for PNL disasters. The bottom line is this: if you aspire to trade options, am I audible to everyone? If I am audible to everyone, please reply here. Okay, fine. Now I'm starting. Well, guys, I'm Sham Sundar Tripathi. I'm a trader, both for futures and options and cash. Also, I'm also trading in commodity market and currency market. I am a coach of technical analysis. I teach technical analysis to everyone. Now I'm starting strategies. Today is the class for option strategies. I'm telling about basic thing about basic things. So please keep attention. Okay, now all the traders buy option with a hope they would double their investment. With such mindset is a perfect recipe of profit and loss disaster. Is this trade option? You need to right way and follow the right approach. Else you can be rest assured to gambling attitude. Okay, you need to be right way and follow the right approach. Rest assured to consume your entire trading capital though, guys. And you will end up having a short self-destructive here. Now, I mention this now. The common phrase that goes like this: limited risk, unlimited profit potential. Profit and loss clear. P traders are delusioned by this theoretically correct but practically disastrous. You have heard that option in trading an option there is a limited loss and unlimited profit. All of you have heard. Am I right? In trading in option there is a limited risk and unlimited profit. Have you heard? Please reply. Okay. Limited risk and limited profit potential is a silent profit killer, guys. Are delusioned by theoretically correct but disastrous fact and thereby end up by blowing up their books slowly and steadily. Hence, I do believe blindly without strategy is dangerous and pastime. If you want to pass your time in trading, then you can trade in options. Trading in option is enjoying a cup of tea. You will get huge money in one trade, and you think that I'm the star of this market and I can trade in every market and person in a minute of time. By this, I don't intend to scare you. With this note, I'm only trying to set a context here. With the previous module in option theory, I'm sure you would have realized other than topic. In this module, I will attempt to give you good overview need to know about some the popular option strategies, guys. Try to stick the practical aspect and ignore the unwanted confusing theory parts. As far I am aware, there is a close and 500 option strategies is there in all the public domains. If you search in a Google, the option strategies to trade, there will be around at least 100 odd strategies are hidden in proprietary books of brokers, bankers, and traders. You know all the strategies put up in the public domain. Answer is simple no. You do not need to know all the strategies. Only some of basic strategies. What should you know? You only need to know handful of them really well. If you are learning these strategies, what I am telling about you, learn very well. These strategies, all you need to do analyze the current state of market or the stock with the right option strategies from your strategies brain. Rohit Kabraji, I'm just asking some doubts of our viewers. If there is any doubt, give me here. Audio is not breaking. Now, there are three type of spreads: bullish strategies, bearish strategy, and neutral strategy. What you have to learn: first, type all the type of strategies what we will cover in this module. All there is some strategies I must tell you. I will copy. First you have write. Please write the all strategies. If you have a copy and pen, please take now. Ready for noting down the strategies for options, trading options, basically. And I'm sorry, guys, in English, but I'm trying to my best to speak in English. If you have a copy and pen, please take that, and I will tell you some strategies name what we will cover in the upcoming classes. What we will cover, I'm telling their names. So please, if you have, then please take down. Okay, now first, okay, what will be the strategies for bullish market? Bullish strategies. Under the bullish strategies, the first topic is bull call spread. Second topic is spread. Third topic is call ratio back spread. Fourth is bear call ladder. Call butterfly. Next is synthetic call caps. Now, second part is bearish spread. Under bearish spread, it is bear call spread. Spread. Third is bull put spread. Is put ratio back spread. Fifth is strip. Sixth is synthetic put. Neutral strategies. What will be the neutral strategies trading in options? Long and short straddles. Long and short strangles. Third, iron condor. Fourth, butterfly. And last is box. So, guys, all these um, are have you written, guys? It's about all these strategies which I have mentioned earlier. I will cover all these strategies in my upcoming classes. Today, I will cover bull call spread. So, beside discussing the above strategy, I also intend to discuss max pain for option writing. Trades employing dynamic delta hedging. The plan is to discuss one option strategy per chapter. There is ample clarity about the strategies without any mix-up or confusion, guys. Take all the strategies per day so that you should not confuse, and you have to clear your doubts. That's why I am taking all the strategies per day. Now, I suppose each chapter would not be too lengthy. For each of the strategy, I will discuss the background implementation, payoff, break-evens, and perhaps the right strike to use. Call is there. Right strike to use considering the time to expiry. Here, working Excel model handy if you intend to employ the strategy. While I will discuss the strategies keeping the Nifty index as a reference, you can use the same for any stock option. I will take only Nifty index, any stocks. Now here is the most important thing, guys. I want you to be aware that a holy grail in this module. Holy grail in this module. So please leave this modules, leave these classes. I'm not that God holy grail so that you can earn money regularly and perfectly. Sure shot. So grail in this module, none of the strategies that we discussed here in the module. In fact, nothing is in this market. In this module is to ensure that we will discuss few basic but important strategies. If you deploy them right, now think about this way. If you have a nice car, let's take example. Overall, I will clear all the topics with. So take this as an example. If you are trading an option without strategies, what will be happen? Let's take an example. This way, if you have a nice car and drive it properly, you can use it and continue to insure yourself and your family. However, if you are rash, then it can be dangerous to you and everyone else around you. These strategies make money if you use it right. If you do not, then they can create hole in your profit and loss. My job here is to help you understand these strategies only. Help to drive car. I'm helping you through how to drive car. I'm tutor. You have to respect me, and what I'm telling you that in your trading strategies. And I will also attempt to explain the best condition under which you can use these strategies, but making sure works for you in your control. If you are have controlling power, that only you can control it. This really depends on your discipline. Okay. Having said this, I am reasonably certain your application of strategies will, and when you spend more quality time in markets. This chapter we focus on bullish strategies with the bull call spread making it. So guys, stay tuned. I will be back in 5 minutes, so please be tuned. Okay, I'm back now. Let's start, guys. Bull call spread. Basically, the spread strategies are some of the simplest option strategies that trader can implement. Is- Spreads are multi-leg strategies involving two or more options. When I say multi-leg strategies, it implies the strategies require two or more option transaction. If I am telling about spread, then there will be two options, maybe at the money, maybe out the money, but there will be two option transactions, guys. So now, I'm sorry. So now spread strategies such as bull call spread is best implemented when you look your view. I think your view will be good word for this. If your view on the stock or index is moderate and not really aggressive. For example, the outlook on a particular stock is moderately bullish or moderately bearish. Some of the, I'm sorry guys, some of the typical scenarios where your outlook can turn moderately bullish. Some perspective are there, so please listen carefully. First is fundamental perspective. Example, let's take example guys. What will be the fundamental perspective for option tradings? Now, here is an example. Reliance Industries is expected to make Q3 announcement for the management's Q, Q2 quarterly guidance. You know that Q3 results are expected to better than Q2 and Q3 of the last year. However, you do not know how many basis point result will be the better. Part of the puzzle. Given this, you expect react positively to the result announcement. When the result will be announcement, the price of the stock will move positively because there is a result for Q3 this year is better than previous Q2 result and previous last year Q3 result. So by this, you know that the stock price will be move upward, but you do not know how the what will be the points to move stock for the further. However, because the guidance was laid out on Q2, the market could have kind factored in the news. Think that the stock can go up, but with the limited upside. Now, there is a technical perspective. The stock you are tracking has been in the downtrend for a while, so much that it. Let's take an example of Lupin. Now, take the example of Lupin. Now, that is the Lupin is 50 to 52 week low, testing 28 to 100-day moving average, and also near the multi-year support. Given all these, there is a high probability that stock could stage a relief rally. Means there is a downtrend from when when you started tracking the stock move downward and hitting 52-week low and testing 200 moving average, and there is a multi-year support. However, आप सोचेंगे वहां पास आप लोग वहां सोचेंगे मतलब you will think that stock will take relief rally and will move forward. However, you're not completely bullish as whatever said, and then the stock is still downtrend बिकॉज आप सोच रहे हैं कि ट्रेंड तो बढ़ेगा, मार्केट बढ़ेगा, बट स्टॉक अभी भी डाउन ट्रेंड में है, तो आपको कंफर्म नहीं है कि कितना बढ़ेगा. नाउ quantitative perspective, the stock is consistently trading between first standard deviation minus plus I think plus 1.5 plus standard deviation and minus standard deviation consistent mean reverting behavior. However, there has been sudden decline in the stock price, so that the stock price is now at second standard deviation. Guys, do you know standard deviation? What is the meaning of standard deviation? Guys, clearly I will say standard deviation means volatility. If anyone telling that some percentage of standard deviation, there is a percentage of volatility. Means is if anyone telling there is a 10% standard deviation, then there is 10% volatility in those stocks. Understood? So now there is no fundamental reason backing the stock price decline. Price has declined, but there is no fundamental reason. Means you can say there is no negative news for the stock, so that it can decline, but it declined. Hence, there is a good chance that stock price could revert to mean. This means you bullish on the market. If you this means आप bullish on market में, but the fact is there is a chance that it could spend more time near the second deviation before reverting to main caps your bullish stock outlook. The point is here, your perspective could be developed from any theory, fundamental, technical, or quantitative. You can have any perspective regarding you are fundamental trader, technical trader, or quantitative trader. Find yourself in moderately bullish stance. In fact, this is true for a moderately bearish stance as well. In such situation, you can work a spread strategies wherein you can set up option position in such a way that now all the theory is there. What I have told you now, there is a summary. Here is a summary. I am telling you. Spread means you do not have any idea. You do not have any idea, but you have a little bit idea that stock will move upward. But how much and when you do not know. Then only you can use the bull call spread strategies. You protect yourself by using this. You can protect yourself on the downside in case you are proved wrong. The amount of profit that you make is also predefined, capped, means the profit you will earn is defined, predefined, means you can say that when you are implementing strategies, the profit will be predefined by strategies. As trade off for capping your profit, you get participate in market for lesser cost. Now let's come to strategy note. कौन हो भैया? Now strategy notes. First of all, amongst all the spread strategies, the bull call spread is the one most of the popular one. The strategy come handy when you have moderately bullish view on the stock index. Bull call spread is two leg spread strategy traditionally involving ATM and the OTM. However, you can create bull call spread using other strike as well. Bull call spread. Now I am writing something in document. You can write that. You can write there in your PDF or in your paper pen also. Now I am removing this. Now I'm typing basic things to implement bull call spread. First point you have to take in mind that buy one ATM call option. ये हो गया part one. Leg one. You can say leg one. Second, sell one OTM call option. This is leg two. Now, by doing this, you have to ensure that all strike belong to same underline. What I have told you means all the strikes to the same underlying means the strike you are selecting, the strike price you are selecting, you have to choose all the strike price of same underlying assets. If you are trading in Bank Nifty option, that then all the ATM call and OTM call you have to select from only. First part, you have to ensure when you do this, ensure first all belong to the same underlying. Second, belong to the same expiry status. Third, sorry guys. Third, each involves the same number of options. For example, let's take example. Let's take an example of stock A. Let's take example of stock A. Now, A spot price is 7846. Sorry, 7846. Spot price is 7846 and ATM is 78CE. Now, premium of this option is 79 and OTM is 7900 CE and premium of 25. You have two options: ATM 7800 CE premium is 79 and OTM 7900 CE premium is 25. Let's take an example. Now, now we will set a trade setup on these values. What will be the trading setup of these values? If you are trading in bull call spread, you have to take one ATM and one OTM. I have given you one ATM and one OTM of spot price of stock A. Now, what will be the setup? Setup of bull call spread. You have to first buy 78 CE by paying 79 premium. Understood, guys? Have you understood this? So, this means your money is going out. So, this will be debit transaction. Your money is going out from your account. Then this will be debit transaction, guys. Now, second point is sell 7900 CE buy and receive 25 rupees premium. Now, after selling 7900 premium CE call option out the money, receiving 25 rupees as premium means this transaction is a credit transaction. So the overall net cash flow, what will be the net cash flow? Net cash flow is nothing but difference between debit and credit transaction. Difference debit and credit transactions. So what is a debit transaction? I have told you 79. And what is the credit transaction? 25. So what is the net cash flow? Please calculate that. If you have calculator, then calculate that. So that net cash flow is a 54. Am I right, guys? Okay. Generally speaking, guys, in a bull call spread, there is always net debit credit, net debit hence. So you can basically you can say that bull call spread is a debit call spread strategy. Understood, guys? Now let's see after scenarios. What will be the scenarios? Scenario 1, market expires 700 7700 below the lower strike price ATM option. What is the scenario? Let's take some scenarios. Scenario one. There will be some scenarios because this is a market and you have purchased a ATM and sold out the money. Then scenario one, market expires at 7700. So what will happen? The value of call option would depend upon its intrinsic value. If you do you know, guys, option basic, what is the intrinsic value? If you know option, then you can understand this. The value of call option would depend on upon intrinsic value. Max 0. Agar if it expires, then it will be the fall of max 0. Intrinsic value cannot be 0, but in case no, do you know, guys, do you know about intrinsic value? Please, if you know, please tell me. Guys, do you know intrinsic value? What is the intrinsic value? If you know, please tell me. Okay, now fine. Now, in scenario one, if market expires, then what will be the intrinsic value? Obviously, there is a formula of intrinsic value: CMP minus CMP minus strike price. To calculate intrinsic value, there is a formula: current market price minus strike price. So what is the strike price? Strike price is 7800, which you have bought. So now 7 sorry, and what is the closing CMP? CMP is 7700 minus 7800. So result will be the minus 100. But in option, intrinsic value cannot be negative. It can be only 0. So you have intrinsic value 0. Since now you have understood, I think you have understood that in scenario 1, there is an ATM option you have purchased at 79 rupees, and that intrinsic value of 79 rupees has been lost. You have lost all the intrinsic value and you have made 79 rupees to 0. Since 7800 ATM call option has 0 intrinsic value, we would lose all the entire premium which have been paid. 79 rupees you have paid, then you have lost it. Value became 0 at the expiry. So the 7 what you have sold, I think you have sold some of the out the money option. 7900 option has also has a 0 intrinsic value. If 7800 has 0 intrinsic value, then 7900 call option has also a 0 intrinsic value. But since we have sold written this option, we get retain premium of rupees 25. Understood, guys, what I have told you? I think you do not have understood. So let's take let's type me. Let me type. Sorry. The 7900 CE option also has 0 intrinsic value, but since we have sold written this option. You know what is the meaning of written? Written means selling, short selling of an option. We will get the premium of 25 rupees. There is a profit which you have sold 7,900 call option. You will get 20 premium. So our net payoff from this would be minus 79 plus 25 equal to 54. Understood? Now, that 54 is our net payoff from this would be. This is our net payoff. You have paid 54 rupees to market. You have traded two quantities and your net loss is 54 rupees. Now, scenario 2. Let's take scenario 2. Market expires at 7,800. Now, मैं यहाँ पास अपना मैथ कैलकुलेशन स्किप करता हूँ, आप लोग समझिएगा उस बात को. आई एम स्किपिंग मैथ कैलकुलेशन हियर. Now, market expires at below 7,800. Then what will be the intrinsic value of that you have asked? यार obviously guys 7,900 अगर जीरो हो रहा है तो 7,800 भी जीरो ही होगा कि नहीं होगा? सिंपल चीज है, 7,900 एक्सपायर हो गया और वो जीरो हो गया तो 7,800 भी तो जीरो ही होगा. चलो कोई बात नहीं, सिनेरियो 3 में चलते हैं. लेट्स टेक सिनेरियो 3. मार्केट प्राइस एक्सपायर एट 7,900. अब what will be the intrinsic value? Obviously intrinsic value would be 100 because you have taken ATM of I'm asking about the ATM option which you have taken from 79 rupees. What will the intrinsic value? You have taken 7,800 rupees as intrinsic value as at 79 and now market expire at 7,900 in scenario 3. Then you will have 100 rupees as your intrinsic value. Since now how much premium you have earned? You have earned that 79 rupees also and extra income of 21. Means you have earned profit of 21 rupees. Now, if market expires at 7,900 rupees, then intrinsic value of 7,900 will be 0. How? You have sold one OTM 7,900 of option of OTM. You have sold that at 25 rupees then, and that intrinsic value has become 0. Then you will earn 25 rupees as premium. So total profit would be, what will be the total profit? Total profit would be 746. 25 plus 21, 20 20 40, 40 5 1 6, 46 रुपए आपका टोटल प्रॉफिट हो गया दोस्तों. Understood? Now take scenario 4. If market expires at 8,000, what will be the intrinsic value of 7,800? 200. And what will be the intrinsic value of, what will the intrinsic value of 7,900, guys? 100. Am I right? Okay, fine. So 79 from this 200. Total profit. What will be the total profit of 7,800? I'm writing here total 7,800 ATM at 79. So 200 को माइनस करना है 79 से 1 to 1. 1 to 1 total. There is, this is a total profit you have earned if market expires at 8,000 level. And now what will be the intrinsic value of 7,900 which you have been sold? You have sold that option at 25 rupees, and now you have sold 25 rupees of premium of 7,900, and market 7,900 and made a high of 8,000. Then your premium has been lost and you earned the intrinsic value of 7,900 option is 100 rupees. So total loss कितना हुआ आपको? Total loss 100 minus 25. So total loss would be 75. Understood? So then overall profit, what will be the overall profit? You have earned 121 rupees at 7,800 at the money option, and you have lost 75 rupees on OTM out the money option. Total profit. Total profit will be 121 minus 75 is equal to 46. Then also you have earned 46 rupees. Means if you have neither view, means if you do not have a view, you have a view, means you have a view but do not know how the market will react. So you can try a bull call spread. This is the total scenarios I have discussed here. I've been discussed here. All the scenarios, what will be the what can be happen if you are trading in stock options. So I think you have understood bull call spread. Now I'm asking you, have you understand all the bull call spread option? Have you understood? Guys, have you understood bull call spread? If you have understood, please reply. Okay, now guys, your bull call spread strategy. Now second point is strike selection. How would you quantify moderately bullish, bearish? Would you consider 5% move on Infosys? Take example of Infosys. as moderately bullish move, or should it be 100, should it be 10% and above? What about the index such as Bank Nifty and Nifty 50? What about mid caps? Stocks such as Yes Bank, Mindtree, Strides, Acrolab, etc. Well, clearly there is a no one shoe fits all solution here. One can attempt to quantify moderateness of the move by evaluating stock index volatility. Based on volatility, I have devised a few rules. Work all right for me. You may want to improvise on it further. If the stock highly volatile, then I would consider a move of 5 to 8% as moderate. However, if the stock is not very volatile, I would consider sub 5% approx, 4 to 5% approx as moderate. For indices, I would consider sub to 4 to 5% as moderate. Now consider this. You have a moderately bullish view on Nifty 50, subject to 5% move. Given this, which are the strike to select for the bull call spread? Is ATM is the ATM plus OTM combo is the best possible spread? The answer to this depend on good old theta. Do you know theta, vega, rho? Do you know everything? If you do not know, then please tell me. Okay, I think you know everything. Here is a I think you have understood bull call spread, and the basic thing of bull call spread I have covered everything regarding bull call spread, and I think you have understood bull call spread. Second point, first point is bull call spread scenario. I have cleared all the scenarios, and second, how to choose a strike price. So choose strike price nearest to the market. By this, I wish you have learned bull call spread accurately. If you have doubt, please remind me in my WhatsApp number. I'm sending my WhatsApp number in my live chat 8982496905. This is my WhatsApp number. If you have in doubt, you can contact me, guys. Ending my session now, and the next topic will be bull put spread. Now, please, you can ask me your doubts if you have in doubt. So please let me leave. Okay, guys. Thank you, guys. If you have a doubt, you can ask me question right now. You have a 5 minute. You can ask anything about bull call spread. I have told you in this my session, and from upcoming session, I will talk about for more strategies. ओके सर, थैंक यू, वेलकम गाइस। मैं चलता हूँ, आप विदाई लेता हूँ आपसे, मिलता हूँ आप अगले सेशन में जहां पास हम पुट के बारे में पढ़ेंगे, मार्केट बुल पुट स्प्रेड। अभी के लिए इतना ही। मिलते हैं अगले वीडियो में।